following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. What are we doing here right now? We're up 7 points in the S&P cash. Volume dramatically lower than the last week. We've been kind of pulling off each day a little bit. Today is a magic swan dive off of previous volumes at this time as we come in. Anyway, up 7 points. The Dow's just gone flat. Still have a little bit of rearranging the chairs, deck chairs on the Titanic, but we'll get into this and much more in an action-packed, very special edition of the Power Trading Hour.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, as I said, we're up a little. Volume is fairly light. You can probably write off a bit of this to the Fed president coming out and yakking this morning. Oh, boy. I should have had that ready. I don't know why I didn't have that all set to go, but there's where's my, maybe it's, oh, I do have it.
You talk too much, you worry me to death. You talk too much, you even worry my pet. You just don't.
Yeah, I've got to play the Janet Yellen theme anytime she comes out and yaks. They do talk way too much. But anyway, I think the lower volume started this morning, a little bit of pullback. Options expiration is tomorrow. That is more than likely a flat to slightly down day. Options are pointing somewhere to 2160, 2165. 2175 would not be out the range of a normal distribution of what options are telling us. I just don't see a great deal. Could we pull back a little bit? We could. To me, I'm sitting on my hands Monday and Tuesday. Options rollover. To me, there's probably a fairly large move coming out sometime mid next week. A lot of things going on that make me absolutely scared to death to be long in this market. It's because I've seen this same kind of action before, right before the giant rug pull. We'll talk about that and a few other things. But, well, I guess we've got to get started.
Then it's all just a little bit of history repeating.
It is nothing but history repeating. What's going on today? Well, pretty much whoa. Hang on a second. Stop that. We've had an escaped dog here. I'm going to have to make sure that that dog does not escape after the break. Anyway, on this day in 1970, Stanford Research Institute scientist Douglas Engelbart obtains a patent for his XY positioning indicator for a display system, which we know today as the computer mouse. In past episodes, exciting episodes of the Power Trading Hour, we've shared the video in 1968 of literally everything that came out in the mid-'80s being demonstrated from Stanford Research Institute, Stanford. And eventually that stuff all ended up over at Xerox PARC, where a guy named Steve Jobs saw it in 1979, decided to make computers based on it, then told everybody he actually invented it all. And much like Al Gore saying he invented the internet, he did not. There's some great video on their website if anybody wants the video. You can see the scientists showing graphical user interfaces, mouses, all kinds of other stuff that we use today in 1968. It wasn't really practical. It was more for demonstration. A lot of this stuff in colleges is, even as they got into the late 70s with Xerox having something that really worked. In fact, the Lisa was pretty much a direct ripoff of what Xerox did, but Xerox management, they had absolutely no idea what to do with it. PCs weren't going to come out even then for another 2 or 3 years. So what's going on in this? Well, there's a lot of people that, as I was reading earlier, have a 4 and 5 Pinocchio history. Pretty much Steve Jobs was one of those. When caught and actually brought up on charges, not actual criminal charges, just someone said, hey, you didn't invent all this stuff. He said, oh, yes, I did. And then they showed the video, and then he said, well, it's all different. Well, it wasn't any different. He finally got down to the position that great artists, good artists borrow, but great artists steal. And that is one of the more famous quotes from Steve Jobs. He's not farther on or any farther than anybody else willing to stretch the truth. And any fans of Mark Twain knows that they're just lies and stretchers. This was one of the bigger stretchers of the computer industry. But you know what? Very few things people invent. Almost always there's somebody out here thinking of some great idea, maybe even writing it down, putting it in a movie and fudging it. It may take 5 or 10 or 15 years for this stuff to come along. But not everybody is starting from square zero. We're all standing on the shoulders of people that came before us. And it's important to realize that. Often I say I invented the C caret prompt and therefore own every computer. Of course, I didn't, but it doesn't matter, right? As long as you say it, that's all that matters. Well, it did this day in 1970. He actually had a piece of paper that said he invented it, and they had to pay him his patent rights years later on this day in 1970. You can email me at path@tfnn.com. You can call me at 877-927-6648, or you can put a message in the den for a fairly quiet time out here. As I said, a lighter volume. I would not be surprised to see us close tomorrow at 2165, 2170 on the S&P cash. So a little bit of a pullback. Already got some emails in here. We will get to gold, John. And my call on that. I'll get into that in the next segment if we can. I just wanted to go out here for a few. Okay. Meryl Streep. I wanted to get back. I was reading another email. We've been talking about it for a while. Not a lot of movement in Netflix now, but I think we talked about it last week when they threw a big wad of cash at one of our more favorite actors here in the United States. We'll talk more about that later, but a lot of people are talking peak streaming. We'll come back with a streaming theme. We'll talk a little bit more about this, but even more money is being thrown at big actors. The question is whether or not the streaming infrastructure can handle it. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, streaming television these days is all the rage. One of the other things we talked about it last week was a lot of money being thrown at big movie stars to do television. And some of these things have been hit or miss. Of course, the most famous is the stuff from the last couple of months. And one of our favorite weird guys out there that did a 6-part series that was, for the most part, unwatchable, although he rebuffed efforts for them to do it for over a year. They finally made a number that he would sign off on, and that did. But unfortunately, we got 6 episodes of unwatchable TV. And that is the problem out here, is that most of the time there is a back end to movies. So if the movie doesn't do good, the movie star doesn't do all that good. That's not how the business actually works for Netflix and Amazon and some of the others that are doing the streaming. All the money's up front. So if they deliver a giant turkey out there, it's not a big deal. Let's see what else. I like Meryl Streep, too. Who doesn't like Meryl Streep? Who could watch Sophie's Choice? Oh, talk about the most depressing movie in the world. But a good movie, but depressing. Anyway, they're going to pay her $8.25 an episode, which is kind of big. I did look at some of the other articles about what they're paying other folks, and HBO is, for this last season of Game of Thrones, is going to pay the top 5 actors $1 million apiece. So I don't know. You know, that's a different different kind of thing. But at this point, I think HBO still needs some kind of big show. The other thing is what's going to happen when some of these shows that were doing very well, like House of Cards, I think it's in its last season. Are they going to have big ones to replace it? And it looks like a lot of these things have not done very well. I was very reticent to see last year when Chelsea Handler got a monster $10 million contract for, was it Amazon or Netflix? Don't remember. Watched 10 minutes of it. It was unwatchable. Saw some clips over the last week. Still unwatchable. Samantha Bee on TBS is making probably 1/10 of what she is, and the show's 10 times better. So you have to always wonder about what's going to work and what's not. And there's no real downside if all your cash is up front, which almost all these deals are. And that makes me think, Amazon, of course, it has so much that maybe this is a tick against it for earnings. My thought is Amazon has bigger problems than throwing money away on streaming. But again, you get a lot of these movie stars that haven't been in television. They get full creative control, and whether they have a hit or a miss is very interesting. A lot of times they do not care. I want to say Andy Rooney, but it's not. I don't know why I'm having a mental blank right now. What's his name? Woody Allen. Of course, no one even knows what they paid him. He had a codicil in there where they couldn't say. But my guess is we're going to continue to see some big hits to Netflix on several fronts. One, there's not a real barrier to entry. A lot of times people have moats. Sometimes those moats are more like lakes, rivers, or even oceans. Netflix, from Hulu to other kinds of semi-commercial backed programs like Crackle. There's a lot of different stuff going on here. I suspect that this whole streaming thing is a lot more like the early days of computers. Who remembers the Orange computer? Or even as late as the mid-'90s, some of those other brands that were and are now long gone in the computer field. It's not uncommon to see a lot of these folks die fairly on. Netflix has got a pretty good idea about what it does. Amazon seems to use it as a tool to burrow itself into your home and some other stuff. But we'll see how this works out. But my guess is that even if these do well, they are probably paying far more than the market will allow, just because a lot of these things are fairly narrow in interest, i.e. these aren't where everybody's watching it like Game of Thrones. These tend to be have a fervent and very vocal crowd following these kind of smaller things. But House of Cards, same kind of thing. It's got a good amount of people, but they are regularly watching it. That can still work. The problem is a lot of these things just have huge budgets that for a very small minority that they appeal to do not go very much farther. Anyway, I'm thinking about yelling peak streaming out here any day now. Other things going on after the bell tonight. I will be in the 4 o'clock hour with Tom O'Brien. After the bell tonight, we've got Post Holdings, Ross Stores, CRM. That's the one that concerns me, and I think will probably be on the downside tonight. We'll talk about that in a minute. Williams-Sonoma also. That one seems to have a lot of movement here or there. I've never been able to pin that one down. But a lot of earnings after the bell tonight. Valiant's ex-CEOs were out breaking the law, or at least that's what our government is saying. They got indicted today. So maybe that'll be a little bit of a warning for others out here in the financial sector. But that's it kind of for the news. We'll be talking about a great deal more things out here. Do I have my charts up yet? I do not. I'm behind the game, but we will look at it. Let's take a quick look at CRM out here real quick and see what it's doing. This thing got hammered, and that's the gap that you see here. We'll go back, put that gap back in. That gap, what do you want to say, was on September 1st with some decent volume. That gap came down on 27.4 million shares, a little bit up off this low, got back to about $67. Now, when we talk about stocks with earnings per share estimates that are sky high, this is the poster child. It has and has had enormous growth. The question is, are they going to have yet another quarter like last quarter where the earnings projections were so ludicrously high that they were not going to be able to ever follow them up? Still good earnings, but if you've got to look at it somewhere around, depending on who you want to look at, whether you're looking at GAAP or non-GAAP earnings, this thing is 60 or 70 on the EPS scale. Absolutely astronomical. You can't afford even a little bit of miss out here in CRM after the bell tonight. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And what else do we have going on? Oh, I got somebody giving me some hate mail, so I'm going to have to answer this one out here. And that is Al Gore never said he was creating the internet. Didn't I play this before?
During my service in the United States Congress, I took the initiative in creating the Internet.
Well, the truth was he had a bill that added about $5 a tax onto telephone bills that was supposed to help develop the Internet. And of course, like all politicians, that money never went anywhere close to helping the Internet or doing anything for the Internet or doing anything that had anything to do even tangentially with the Internet. And as far as I know, that tax is still on there. Many people wanted to put down there the Al Gore tax and change the law because no one could ever get anybody to repeal it. But what can you say? He said it. He should have said, I put on a giant tax of which none went to helping the Internet. What else do we have going on out here today? Much discussion about the dry shippers earlier in the den today. And as they say in politics lately, this is a teachable moment. We've got, what is this thing printing at here? Do I not have even that up? I thought I had that up. Where's it at? Did I accidentally close it and it went away? I think it did. Okay. So anyway, dry is out here. Let me find it. Dry ships now off 78% in one day. This thing hit $102 yesterday. A lot of people going, well, what's going on out here? Basil and I kind of discussed it in his show a little bit. But here is how these things are developed. And this is why I recommend reading Reminiscence of a Stock Operator so much. There are people, and for at least 100 years or more than 100 years, they've been called stock operators. These are guys that run giant scams, somewhat quasi-legal, sometimes not. They revolve around many things. A lot, and I'll have to say that the blame goes to a lot of people in this, and namely, it's the people that wait until a stock goes to 14 cents and they still don't close their shorts out. I don't understand these. Who are these people? Anyway, there's a lot of people out here that will hold on and just assume that they're going to get the stock's going to go bankrupt, and they even get the last 14 cents. These people, who are these people, are the kind of people that create the opportunity for these people to run giant scams. So this company has had like 4 reverse splits, and the last one was on November 1st. It was 15-1. So what happens is, there's maybe, there was 15 million shares in the float. Then there's a 15-1 reverse split. Now there's only 1 million shares. So instead of having maybe 1 million shares short out of 15, now you have 150,000 shares short out of 1 million. And eventually what happens is somebody that's kind of smart is going to see there, you know what, I can buy this stock for whatever it is, $4 or $5, and then I can make all the people that were stupid enough to keep their shorts on eat buckwheats. And that means that you get a fairly large percentage of this. You are probably also the market maker for the stock at the in the NASDAQ. This doesn't happen much on the NYSE. This is kind of a NASDAQ phenomena because of their looser requirements. In fact, dry ships had 2 different times where they were going to be moved off the NASDAQ for not meeting the requirements, and they came back. So what happens? You got somebody with 150,000 shares out here, and you just run the stock up to the moon. Others come along thinking that there's no end to the amount of money, and there's a good way of telling whether or not any of these kind of things are real, and I did do it, and that is you put in an order, and not a market order. You put in as these things are going up, a order, and maybe the stock's trading at $70, and you put in an order for $70.25 or something, and then you see the next tick out is $78, and that's how you know that any time that this market maker sees any thought that anybody's trying to cover their shorts or get out of this thing, they'll just run it up another. They own the other, 800,000 shares. In fact, I think on Monday, although there's only 1 million shares, what did it trade? 9 million shares? So these things are meant to absolutely, they're called widow makers for people out here that are too stupid to take their money when they can. And when I say sell when you can, it also means, cover your shorts when you can. I don't understand waiting till a stock gets to 15 cents and still not taking your cash. But if they can make it through the other side, very smart folks that have done this for years, that combine a little bit of cash in their pocket and the ability to create markets so that they can short or go long without really any big reparations from the market itself, the NASDAQ or the NYSE. But this is kind of a thing that's exclusive to the to the NASDAQ. And, we saw literally tons of this kind of stuff back in the .com resolution. You'd see this happen, just tons, worthless stocks. Somebody gets almost all of the stock. And, of course, you've got people that you're trading against. You can short it at any time. It would not be beyond the scope of reason to think that when this thing went to 102, that they were actually shorting the stock that they were long and or doing other things. There's a lot of things going on to running these giant scams. But the truth of the matter is that these things go back to the 1850s, and they are nothing new. The more interesting thing is that someone will go out here and try something like this in dry ships and make every other stock in the same sector go because somebody thinks that someone knows something about this segment of the market when it has literally nothing to do about it. Right now, though, Dries is trading at $15.92 when it was trading at 102 yesterday. How often does this stuff happen? Not that often, but I will tell you, if you've been through a few market cycles, went through the boom bust of 98, the .com of 2000, kind of the lows of 2003 and 4, the blow up of 2008. And you know what? This not much different than a lot of other ones out there. It may have happened a little faster or a little slower, but these are the signs that people have gotten into betting instead of speculating. And this is one, when you start seeing these, you really have to start saying, okay, if I'm going to be in any of these, it may not be longer than 30 minutes or an hour, but best to avoid them. If you're going to be in them, just put a time limit on them, 30 minutes or an hour. You just don't want to be in there long. When the tide changes, they will never let you out. Every bid, unless you go to market, will be whacked away. They will clean you out. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I had a question from Mike. Maybe Mike will call back. I tend to not look at all this stuff until I go to the breaks. So you're probably best calling in during the break. So I see that you're on the line. I get to talk, and I'm kind of singularly focused. I don't look around, and I got about 5 screens in front of me. I got so much going on that I don't check the IMs all the time. Sorry, Mike. Give me a call back, 877-927-6648. What else do we have going on out here? You wanted to look at the IWM. I don't know what else. There was other symbol, which I don't think is right in my IM. Don't understand what he's looking at here. You got 3 gaps in the IWM. What you would want to say that there is a top end is some kind of decent move back into this last gap. That gap is about what, 127.75 to 129. I'm going to say somewhere in there. That gap is there. Now, what you have going on is some pretty heavy shorting on the 11th, and you want to give 3 or 4 or 5 days normally before a stock would even start to pull back, or an ETF, once you start seeing heavy shorting action. And that's kind of why I have not been talking much about it. On that day of the 11th, you had pretty significant move out there in shorts. And normally, even if these folks are right, they're not going to let you be right fairly often. And again, probably a decent way on the chart to look at shorting that was as it went through that previous high. But almost always the best thing to do is wait 3 days and then see if you still want to short. You've got a nice light volume move up here. You don't have that far to move back down out here to start making some kind of last move on here. Let's see. Anything now below 3x3 displaced average on this thing would give you a sell signal. I would probably also look at traditional moving averages, but that's going to get you in these parabolic moves like you've had in the IWM. It's going to give you way too much movement down. On that one, you'd be down to 122 before you got any signal. To me, the first signal is going to be a close in that 128 area. And again, I would probably look at the displaced moving average. If you're not familiar with this, this is a Joe DiNapoli thing. But you take the average of the last 3 days and you push it 3 days forward. So you can do it in a spreadsheet. It's fairly easy. It's part of the art of timing and trade charts. and you look at it. But anything when you get into these parabolic moves back into gaps, back below the 3x3, pretty good indication that that is over, at least for a while. And again, parabolic moves, huge volume. You've got three nice gaps, and yes, that would qualify for a three-gap play. This thing could come right back down to 116. The question is, does this thing just go sideways until the first of the year and do it, or does it fall off as many times markets have the day after Thanksgiving? Sales aren't good, and everything goes splat. We'll watch it in the next couple of days. But I think I've been saying that if we're going to do anything like really start moving up for a Christmas rally, or if we're going to do something like go splat, we're probably going to know about it on the 22nd or 23rd of next week. So Tuesday, Wednesday, I think you're going to start getting some very good clues. Today, hard for me to get too excited about a market that's got just 2.6 billion shares right now. We're up 7 points on the S&P cash. What else do we have? Okay. Yeah. Somebody brought that up. I was going to talk about it. iPhone manufacturing in the United States. They've done all of their manufacturing for Apple over in China for about 8 years with Foxconn. If you're not familiar with Foxconn, kind of an interesting idea. There are a bunch of cities that are all set up just for Foxconn. These cities can take up to 150,000, some of them up to 200,000 people if you put them all together in 1 week. You could give a call that you wanted to have a million more iPhones made, and they could get those people back in there in about 2 days, kind of like Patton in the Second World War, getting off of one front and in 2 days making it up to Bastogne to kick the Nazis out. And it would not be too surprising. Anyway, this thing's kind of bounced a little bit, going sideways. I still suspect we're coming back to this 101 area. For me, there is a cardinal rule in manufacturing, and that is not have one single point of failure. If you have to have something that you need to be able to get it from two different manufacturers, preferably two different manufacturers in very far different regions, in different countries, probably not touching each other. If there's an earthquake or anything else, your entire company could go down, waiting for these guys to get back on the stick. And I think it's exactly that same way for Apple. Apple has its processor made by two different manufacturers. If one went down, they'd at least be able to sell some and probably even get the other one back up to full production for the processor in a couple of days. The same thing with the screens. They may ask the manufacturer, in this case Samsung, for their screens to be made in two different countries, fairly far apart. So if one country gets nuked, they at least have the second country. And it could be a tsunami, could be anything. But I will point back to when we started talking about how Western Digital made it up to $115. And that was a giant tsunami coming in there and wiping out all the drive manufacturing for 3.5-inch drives in all, because they were all in 4 city blocks in Malaysia. There is a lot to having all the people that make all the products that go into making a hard drive that close. But the downside is exactly what you saw. It did kind of work out just like the airline business did, which is the artificial change in the amount of supply, i.e. the airlines cutting down the amount of seats, led to kind of a nice big run up in the airlines. But in a true open market, not like airplanes where Delta buys every gate in the Cincinnati airport and then decides to charge double. Not a free market. Very hard to get around hard drives being a free market with 3 or 4 players manufacturing hard drives. So Apple, of course, the place to get an Apple is from Apple. But the downside is when you think about business risk, whether it's political or otherwise, you always want to be thinking, what could happen out here that could kill the entire business? Probably with Apple, very few things. But if you're talking about one major city, could it have an earthquake? Could it have a tsunami? Could a volcano blow up in the center of it like Pompeii? Not very smart to have all your eggs in one basket. And Apple talking about moving some of its production here to the United States. They certainly have a lot of engineering now down in Austin, maybe down in Texas, where taxes are nothing like they are in California.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. We're going to close with a couple of things out here. I don't think I see any more emails out here. Said I was going to talk about gold. Talked to Andy during the day before the election, a couple of days after, about what we thought about gold and kind of batted some ideas around. And both of us kind of came to pretty much the same conclusion, and that was that the dollar index was going to go above 100. It has done that, that it probably would not retrace. We're at 46 cents today at 187. That gold would most likely make some kind of low with the dollar around 105 on the dollar index, and that would put us back to at least $1,180. That may be lower, but right now that's the way I'm kind of looking at it. We said that at least I was saying for weeks before that, the most important thing to watch out here is the TLT. This thing cannot get off the ground. That also portends big problems out here. Now, maybe this thing comes down to 120.73, tests the low, or even this gap at 119, and we get lighter volume, and maybe we get a bounce out of this thing. But this is not looking good on either of these fronts. And I think now that we're through the majority of resistance at 100 on the dollar index, you're looking at probably 104.50. The bonds could absolutely get smoked. Saw some discussion about that today from Santelli, who's a big bond guy, one of the few guys I listen to on it. He seems to be at least a fairly straight shooter on the bonds itself. But I don't see anything out here that shows anything other than that. This morning, I thought we got a fairly good conclusion with the numbers in housing up 25%, that we are going to see about 1% higher in the next, let's call it 10 months. We'll get the first quarter in December. I think it's, 96 or 97% in the fund Fed rates that we get one in December. My guess is that we get a few more. And if you've listened to this show before, my opinion has been that Donald Trump is reliving the early 80s, where Paul Volcker came in. He squeezed all the horrible excesses of the market out that were caused by the previous administration. That in doing that, it took about a year and a half or maybe 2 years to get things turned around. But I think that kind of started maybe an 18-year move higher with a few problems that were out there by Milken and the rest of the bond guys around 1990. But for the most part, we had a pretty nice, huge move up. And it all started with getting rid of the excesses in the market and letting a free market kind of allocate cash correctly. And right now we have a lot of cash allocated incorrectly. Higher interest rates will quickly get people out of those things. You know what? I was kind of here at the beginning of the gold calls in 2000. I jumped on board with most of them, made a lot of money early in the gold market. You know, I don't know how long you're supposed to think a gold market runs. If this was 15 years since the beginning of that bull market, could it run longer? I think it could. Could we have a hiatus for a few years? More likely, maybe. Not sure yet on that. Right now, the thing I'm looking at is 1180 on gold. I think down there, and 105 on the dollar index. And that's going to tell us whether or not there's any bottom to this rather still lake out here. I will be back in the 4 o'clock hour. In the meantime, so when you can, not when you have to. We'll see you tomorrow, same back channel.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.